Hey fam, how you guys doing? Hope you're doing well. You guys have been actually coming in very hard. That's some good vibes. Like, share, subscribe. Advanced Market Structure 101. I'm going to be showing you different entry models on how to use them, and I'm going to be showing you my optimal trade entry zones and a lot more that you can use in order to get into different entries. And these are actually going to be live markets, so you can actually go and actually take trades from those areas that have been left behind. So this is Euro USD. This is on the daily time frame. I mark out this entire area because this is a very long period of time because we're on the daily time frame. So this is roughly from November all the way up to right now, currently in December. So what are we seeing? What is the behavior of the market within this area? That is what we're going to be talking about, and why a sell entry is most advisable right now.
Let me introduce you to our sponsor of today, Smart Charts, a premium charting platform with AI generated signals that you can use to profit every single day, with our favorite strategy being the breakfast breakout strategy, which works during the London, New York and Asian Open. Other than that, we have many more strategies that apply every single day, and you can use these strategies to your benefit. Other than that, we offer you free education from the best mentors in the world. You also get to journal your trades. You also get to have a risk management platform that you will exercise with high precision. If you want to risk 1%, you're going to risk 1% no matter how. If you want to risk 2%, you'll be able to risk 2%. Get access to the best platform right now. Click the link in the bio to register.
Let's get back to Euro USD. Euro USD, in this structure, we can clearly see that this market came, okay, we saw this market create this low, okay. After this low was created, we saw a strong push that eventually came. We saw a push retracement, but a push that took this liquidity and pushed back down, creating a shift in character or change in character, continuation to the downside. Okay, so it's always important to check what is happening, okay, because this was a smaller, if you look at this was a smaller uptrend that had begun, okay, but eventually this uptrend failed. After it took this liquidity, we saw it push back down. Okay, same thing we are seeing here. So we started seeing lower lows, lower highs, lower lows, lower highs clearly, and then there was this equal highs that were created here, funny character that happened here. So this entire area becomes liquidity for us. We will be eventually be waiting for the market to come into this zone. Then we saw beautiful low being created, another high, another low, right? So we expect this low will be taken eventually, but there was this area that there's this liquidity that is resting right here because there was some consolidation that happened within this area. Let me show you so that you can see it more clearly. If you look at this area, within this area, you're going to notice that this market was playing within this box. Okay, this market was playing within this box. So there was a consolidation within this area. Okay, there was a consolidation within this area. Then it took the highs, and then we saw the market push down strongly, continuing to take. It took the highs, came back down, continued to the downside. So this is liquidity that is resting right here. Okay, so we eventually need to see this liquidity get taken. Now there's one key thing that we noticed in this consolidation that took place right here. We saw break, retest. The market broke out of this consolidation, retested, continued to the downside, clearly took this liquidity. When we are trading, we always seek to see two things. Okay, what is the behavior of the market? Is it creating lower highs and lower lows, or is it creating higher highs and higher lows, or is it creating equal highs and equal lows? And lastly, where is the market, what is the market planning to do? Okay, once we know the structure of the market, now we ask ourselves, what is the market planning to do? The market usually seeks to do two things, okay? Mitigate and liquidate. Okay, it's always important to take note of those two things. The market always seeks to mitigate and liquidate. So in this scenario, let's take an example of this scenario where we had this consolidation. The market liquidated these equal highs and mitigated into this fair value gap that was left right there and continue to the downside. Okay, or we can say it mitigated into this order block and push to the downside. Okay, any of the two can apply, but this becomes liquidity for us. Then we saw the market push to the downside, take this liquidity, push to the downside, come back with a strong retracement, mitigate into this order block right here, beautiful, and then we saw another liquidity sweep to the downside. So now we expect that this low will also be taken, but this was liquidity that needed to be taken. So I'm going to mark this out as liquidity that was resting right here. Okay, this is liquidity that is resting right there. Okay, so we mark that out as an important zone for us. Why? Because after this was taken, so there's now market is just resting there. What is it doing? There's obviously traders who are here waiting to take more sells, right? There's obviously traders who are here waiting with their pending orders, waiting to take more sells, right? They said, oh, I missed an entry from this area. I probably missed an entry from this area, so I'm going to wait for the market to pull into this area and then I take my sell. What did the market do? It came and tapped into that area and gave us one candle that pushed directly to the downside. So obviously now the traders were telling themselves, now it's time to sell, right? It's time to sell this market. Obviously their entries, it's now giving them the hope that they are in profits, right? So we see this candle push to the downside, red, giving us another candle pushing. This candle is also a low, so it signifies that we're now profitable, right? What happened? The market pushed back up with a very strong candle, taking their stop losses. Okay, why did it do that? Why did it do that? The market always seeks to liquidate and mitigate. Now let's look at this area where we're saying there was liquidity. Okay, this area where they were saying we are saying there was liquidity, right? So it's liquidity that is resting right there. Why? Because it's traders who are waiting to take entries from this area. Now what happened? Now where is the, once this liquidity is taken, where is it planning to mitigate into and continue to? Where will it now go and take liquidity from? Okay, those are the next two questions we start asking ourselves. So now we take our Fibonacci tool. Okay, we're going to take our Fibonacci tool as always, mark out from this high, the high that was created, and we come all the way down to this low created right here. Let's mark that out. Beautiful. Okay, let's mark it out. Perfect. I think right there it's perfect. Okay, either way it's perfect. Now what do we see? Okay, what do we see? Which area does this lie? So we tell ourselves that if this liquidity is taken, telling us that this market, okay, obviously there was traders who are waiting here at the 61.8. This is a golden zone, but my optimal trade entry zone usually lies between this area and this area. Okay, this right here is usually my optimal entry zone, so I'm going to mark it out. Okay, I'm going to mark it out. Very beautiful right there. Okay, mark that out. Beautiful, 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 beautiful. And this being the midpoint. Okay, and I'm going to just outline the midpoint, it being right there. Okay, let's just put it like this, this being the midpoint. I know why I'm marking out this midpoint. Okay, right there. I hope you'll understand it's always important for me to get the midpoint, because the midpoint is usually where I'm looking to take my entries from. Okay, I usually expect reactions within that area, and that is where I'm expecting to take my entries around that area, take to the downside. So what do we expect to see? Because we actually in a downtrend. Okay, we actually in a downtrend. I will not consider this being an uptrend until we see this high getting taken. Once this high is taken, then now we will fully be in an uptrend, right? So for now, I am still on a downtrend, right? Overall, I am on a downtrend, because we can clearly see on a higher time frame, because this is actually the daily time frame. This was the low that was created, this was the high that was created, and this was the next low that was created before now we expect obviously the market to push to the upside, right? So there was liquidity that is resting right here. What do we expect? What do we see within this area? This becomes our optimal trade entry zone, where you could literally decide that at the midpoint of this area, okay, at the midpoint of this area, you could decide to just put your entry, put your stop loss at the high, slightly above the high, not at the high, not directly at the high, but slightly above the high, say somewhere around right there. That's a beautiful stop loss. And then target 1:2. 1:2. Where's 1:2? Because it's obviously we need to target this lows right there. Okay, that low is where we're going to be targeting. So you could decide to do that. Most people do that, but I always advise, instead of doing it's actually a good method of entry, because you will not miss your entries. But one thing that might happen is you might find yourself getting, let's say this market was now shifting its character, maybe it was now creating high highs and high lows, and it just decides to continue, come and take your stop loss. You need to wait. Okay, so this is a good entry model. You're on an optimal trade entry zone. You actually on your premium price entry, where you're now looking to sell. Okay, this is a supply zone, you're looking to sell. You could take your entry from this area, but what I would advise is wait for a market structure shift. What do I mean by market structure shift? Okay, let's push this to the side. Let's push this to the side and now understand what I mean by a market structure shift. Okay, you'll notice that this market was creating higher highs, higher lows. It was now creating higher highs, higher lows, higher highs, higher lows, taking this liquidity, higher high, higher. And the next thing we expect is we now see, look at these candles. I want you to look at these candles. This candle came and the next candle created a high, right? We saw this candle creating a new high, higher than this high. Okay, and the next candle that came after this candle, let's observe this candle now. Look at what happened. It failed to create a high above this, because we are expecting now a continuation, right? So it failed to create a high. Instead, it came and took this low, and we are on a daily time frame. So what does it tell us right here? When you observe right here, what does that tell us? It tells us that, and the reaction is within our optimal trade entry zone, right? So what does it tell us? It tells us that there was a strong reaction at our optimal trading entry zone that has created a shift in character, okay, or a change of character, market structure shift, okay, right here. Because now this tells us that the market has now created a lower low. Okay, now what do we expect? We expect now a reverse. We now expect to see what behavior of the market is going to happen here. We want to see a fair value gap being left behind. Okay, we want to see a fair value gap being left behind, and from this area is where we will be dropping down to lower time frames. If we're on the daily time frame, we're going to take our entry from the 4-hour time frame. I usually advise look for entries on higher time frame. Take entries on higher time frame. They take longer to play out, but they usually are high probability. Okay, but let's look at that. So we say we now look at this candle. You can also call it an engulfing candle because it takes this into, it engulfs this entire zone, and then the next candle, beautiful, giving us a fair value gap. Look at how it closed, giving us a fair value gap or an imbalance right there. Okay, an inefficiency in the market right there. Beautiful. So what do we expect with the third candle or the fourth candle or the fifth candle? We expect a retracement into this inefficiency that was left behind. So let's go to the 4-hour time frame. We're going to be looking at that exact area where we're going to be expecting a play within this, okay, within this fair value gap that we had right here. So look at what happened. This market pushed strongly to the upside, taking this, okay, we are now seeing that it pushed into this fair value gap right here, filling this fair value gap. Now let's take our shorts. We're going to be looking now to short from this area, put our stop loss at the high that was created, okay, this high right there, and we're going to be looking to take a 1:2 type of trade. But I want you to look at this, okay, look at this. Now we're on the 4-hour time frame. What do you see? Exactly what I told you. Look at that. So it was creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And what happened? Exact point where we marked out, you notice that the market changed its character, and then now we saw a retracement into this fair value gap. Short push to the downside, pullback into a strong pullback into that fair value gap, because this is actually that third candle. Okay, this is that candle. This is the third candle this is the candle that marked the fair value gap, right? So we now see it push into the fair value gap, and the next thing we now see is the market moving towards our direction. This is an optimal entry zone or an optimal trade entry technique that you can use. So 1:2, target your 1:2. Always target 1:2. It's safer than targeting 1:10, 1:20. I don't know what numbers you guys do. Just target 1:2. You're going to notice that if we target this 1:2, we're going to see that within this area that we're targeting right here, there's liquidity that is resting right there. Okay, we expect this liquidity to get taken. There is a fair value gap here, so it could decide to mitigate into this fair value gap and continue to the upside. Within this fair value gap, there's also an order block. Okay, so this entire area, it's demand. So a 1:2 is applicable within this area, because we're going to eventually see, maybe probably this market is going to come up to this area, and then maybe it could decide to push to the upside. So a beautiful trade entry you could get just by doing that and waiting for the market to play towards your direction. I hope you have understood this entry technique. Okay, 2 things: understand the structure of the market. What is happening on the higher time frame? What is the market structure? The next thing, where is the market heading to? On that area where you're asking yourself, where is the market heading to? Ask yourself, where is liquidity and where does the market seek to liquidate? Once you know that, you can literally catch very beautiful trades. Even these trades, you're going to notice that this was a higher high that was created. So what do I expect? I expect the market to mitigate into an order block or a fair value gap. Right here, what do we see? We see a fair value gap that was left right here. We see an order block. What do we expect? Take our entry from this order block, put our stop loss below this low, and target 1:2. What do you see there? 1:2. That is a trade we took. You could also decide to actually take your Fibonacci tool. Same thing. I want you to look at the same entry, mark it up to there, right there. Okay, what do you see? The market tapped completely. It came into our optimal trade entry area, and next thing you saw, a strong push to the upside. That is how I take my entries. Always. That is how I take my entries. So This entry, you can call it a change of character type of entry that is in confluence with your optimal trade entry zone and higher time frame analysis. Okay, this entry is just a 4-hour time frame entry that you are trying to capitalize on small movements, okay, on small moves. Okay, now let's continue. I want us to look at now another currency pair. Let's look at USD CHF. Okay, current trade that we are taking, USD CHF. Okay, let's look at that. It's the same thing we are doing. Okay, it's literally the same entry model that we have, that we are targeting to take our entries from. I actually took this entry from this zone. I took an entry from this zone. I knew that we would see a reaction at this order block, and there was actually a reaction at that order block. At this, it's like a, what we will call it, a break and retest. We are seeing a break and retest of this. This was formerly it was supply. Okay, we knew that this market is going to react within this order block and then push to the downside. But what did we see? We saw the market now come back, push to the upside, leaving a fair value gap, telling us that it's time to buy, right? So we bought this market. I actually gave out this entry. So we bought this market from this area. Why did we buy this market from this area? Well, you're going to notice that we got a strong impulse move, and within this strong impulse move, there was a fair value gap that was left within this candle. So what do we expect? We expect that when the market is retracing, it's going to retrace into this fair value gap, this inefficiency, and then we are going to see a continuation to the upside. Always targeting 1:2. You will see that happened right there. So what did I do? I put my entry at that. Inefficiency. I left space for this order block because the market could decide to completely fill this inefficiency, come into this order block, mitigate into this order block, and continue to the upside. So I put my stop loss below that area of, or you can call it an area of interest or a POI, whatever you're going to decide to call it, and put my stop loss below that, targeting a 1:2, and it was completely filled. We took this trade live. In fact, I took this entry live on this YouTube channel. It was live on this YouTube channel. I also gave the same entry on my Instagram at YoungJoe. You can go and check it. About 5 days ago, 6 days ago, I'm not sure. Now we saw, I actually took this sell. I took this sell from this area. Why did I take this sell from this area? This area we expected to get liquidated, but within this area we also remember that this is supply. Okay, why? Look at this area. We saw it push this market to the downside. The market came back to that area. We saw it push strongly to the downside. So we expect at least there's going to be a reaction within this area. You can call it resistance. Okay, this becomes resistance. We expect that the market, there is going to be some reaction within this area, right? What happened? Market tapped into the area, and we eventually saw reaction as a form of retracement into this, okay, this former supply, okay, now turned demand. So what happened? We saw this push to the downside. I took that entry. I posted this entry. Okay, now I expect this market to come completely into, I expect this market to come after it takes this liquidity, same way we took that liquidity on Euro USD. I expect this market to come and take this liquidity. It pushes into this order block right here, into this order block. As you can clearly see, I have marked out my optimal trade entry zone, 78.6 and 61.8. What do I expect? Let's say half of this. Okay, let's take a look at half of that. Probably weighs half of this. Okay, let's say the half of this place will be somewhere around here. So this is where I'm going to be seeking to take my entry from. So I'm looking at this on a 4-hour time frame. So what am I going to do? I'm going to drop down to a 1 hour time frame, wait for the same scenario that we saw on Euro USD. On this 4 hour time frame, I'm going to be checking on the candles. So I'm expecting that tomorrow we're going to see another strong candle like this. So let's say the next candle that closes above that closes as a red candle, closes below this, fails to take that high. What am I going to do? I'm going to now know there's a change of character. Now it's time to drop to a lower time frame. First, I'm going to mark out a fair value gap. Then I'm going to drop to a 1 hour time frame, and I'm going to take that entry. It's very, very simple. Okay, trading, you should not complicate anything. Very, very simple. Right here, beautiful support and resistance trade. It went through as a form of retracement. Take it in this perspective: break, retest, break, retest, break. Okay, we expect. Do you understand what I've talked about? You might not understand the break, retest that I've been saying about right now. Let me show you. We're seeing a break, retest, a break of structure, because right here, so a break of structure, retest, another break of this structure, because this high is right here, so this high was taken, retest, break of structure, so we expect to see this high getting taken, break of structure, retest. So now we'll be checking, will this retest create a change of character? If this does happen, it is in confluence with our optimal trade entry zone right here, where we will now, and there's an order block where we will now say, now it's advisable to take this sell. Where will we be targeting? The lows. We'll be targeting this low right here. Okay, our target will be this low, but obviously there's an order block that I've marked out there, so I'm going to be targeting to take that market to mitigate into that order block of fair value gap. This is a fair value gap, in fact, so I'm going to be waiting for the market to mitigate into this fair value gap and a continuation. Right here you can see this impulse move was created from markets mitigating into this inefficiency right here. Beautiful. Always remember that market liquidated this liquidity that was resting here. It came, tapped into this, it came and mitigate. After taking this liquidity, it mitigated into this area of interest right here, where we had an inefficiency, strong push to the upside, where now we're seeing it push to the upside. Where's the next liquidity that needs to be taken? There's liquidity here, so we want to see this liquidity get taken, market tap into this order block, and then now we take our sell entries. Beautiful, simple. Always keep it simple. Happy trading.